I just think 2026 will look like last year. So our base case is we are strong in the first part of the year.
Okay.
But then we have a drawdown that feels like a bear market.
Okay.
But we'll rally strongly. And I think at least a 10% gain, maybe more. You know, the rule of first 5 days, which is on the right side, on the tailwind side.
Yeah.
It came in positive.
Okay.
Which is a good thing. But if the first week is positive and then the first month is positive, the probability of an up year jumps to like 92%.
What the hell is going on? Bitcoin is crashing today.
Can you tell us a little bit about the crypto market over the last 3 or 4 months?
Crypto was doing well until October.
So do you buy that story? The option story?
Yeah, a few things happened in October.
Okay.
So crypto was actually up like 36%. And then from October to the end of the year, it actually had in some cases, like a 40% drawdown.
Yeah.
One was there was a big deleveraging. There was basically a pricing exploit that took place on one crypto exchange that led to what they call an automatic deleveraging. Then that cascaded across all the crypto exchange, and it was the biggest deleveraging event in the history of crypto, bigger than what happened with FTX after SB.
So what happened?
Failed.
The people with leverage got unwound and they were forced out of longs, and it kind of wrecked the trend.
Correct, and it was a pricing error, but it liquidated over 2 million accounts globally. It wiped out, I think, a third of all market makers, which are important for they're the equivalent of central banks, and it crippled a lot of crypto exchanges. So their balance sheets took a huge hit.
Coinbase is in a 50% drawdown. I think it's second 50% drawdown since coming public. And Coinbase is a big company. So if that stock looks like that, you can only imagine the privately held players in the ecosystem, what that must have meant to them.
Yeah, so Coinbase, let's say, is a fortress balance sheet. Then imagine those who have like okay balance sheets.
Okay. Has that run its course?
In 2022, it took about 8 to 12 weeks before risk appetite could recover. So we're like kind of in that outside window. In Bitcoin, I think there is a turning of the holders, because one of them is, Bitcoin's like 14 years old. So like the crypto punk, the 20-year-old is like becoming a mature person.
Right.
And many of them made fortunes.
Yeah.
So they've been selling their Bitcoin.
Okay.
And then, as you know, there's this quantum risk that is more Bitcoin specific, because quantum developments are accelerating.
Yes.
And about a third of Bitcoin wallets are not upgradable. So they're actually quantum vulnerable. So quantum operates more like an ASIC, like a brute force of a repetitive calculation. So it can break encryption. So Bitcoin's encryption is what can be broken. You're right. So you can break a lot of encryption. But banks hopefully would be upgrading all their customer passwords, force you to do a new type of password. And that's how you avoid quantum vulnerability. The thing is, like a lot of Bitcoin wallets, like Satoshi's, haven't ever been upgraded. And of course, Satoshi's wallets.
How do you upgrade a wallet to make it so that the blockchain itself, that vulnerability to quantum computing will be protected against?
You'd have to fork Bitcoin. I mean, or you have to contact the guy and say, like, upgrade your wallet. If it's like a Ledger wallet or whatever.
So, but I'm saying if you upgrade your wallet, you're safe, but the price might not be safe.
Well, if you
might be safe from losing your Bitcoin, but if there's a mass hacking event or there's some way that, and I, like Michael, not an expert, but if a lot of nodes just go away because they're worried about that risk, or if somebody influential comes out and says, I have information and I think like literally there's a quantum computer right now in the process of hacking the Bitcoin blockchain, like that, you could upgrade your wallet, but the price is going lower.
Well, one, if someone developed a quantum hack, they wouldn't reveal it. Like a nation state would just steal those 1/3 of the Bitcoins.
Until somebody starts to notice.
Yeah. Now, Ethereum, for instance, upgrades twice a year. So they're already developing quantum resistant. So like a lot of blockchains are going to be quantum resistant.
Okay.
Just the way like Chase will upgrade all their encryption.
The advent and mass popularity of Circle and all of these stable coins now. Fidelity launched one this week. Did that steal some of the use case away from Bitcoin?
Well,
have you heard that before? I know I'm not the first person to say that.
I have.
Okay.
But there is a really big story around blockchains, which is Wall Street dismissed blockchain and crypto as like just experiments. But now financial institutions are rebuilding settlement layers using blockchains. That's what Standard Chartered said at Davos. The UBS CEO says that in a few years, there's a convergence between digital assets and traditional finance because blockchains offer finality and a lot more security. And Larry Fink says he thinks that the entire financial system is going to operate on one common blockchain.
But why is that good for Bitcoin?
Well, it's probably good for Ethereum.
So Ethereum's the useful blockchain that can actually help bring that sort of thing about.
Because that's really where stablecoins have been built. You do smart contracts so you can lock information and prevent it from actually being altered. You could put a 1 million-page legal document on the Ethereum blockchain. If someone tries to change a period on that blockchain, the hash fails.
Right.
So that's how you protect information.
Right.
It's 100% uptime. This is what Wall Street, as they think about the narrative around the future, is they're building their entire system on contracts like Ethereum, which is really bullish for Ethereum.
What is it?
Okay, so if we talk about stable coins, Tether has about 160 billion of US dollars tokenized on as Tether is a company.
Yes.
But it's mostly running on Ethereum. Even though it's only 168 billion, which is less than 1% of M1, so it's not even like risk assets, it's not credit equity tokenization. Right. They're going to make $20 billion this year. Actually, because of their balance sheet, they might be making like $24 billion.
And that's just the interest on the treasuries that they own to back the dollar value of the coin.
And because they're over collateralized, they actually own like now almost $30 billion worth of gold or something.
Oh, wow.
Right.
Okay.
But so let's say they make 20 billion, not 24, but somewhere between 20 and 24. They're a top 5 most profitable bank in the world.
Wow. It's amazing.
They make more money than Goldman or Morgan Stanley.
That's amazing.
And that's just a monoline product with 300 employees. So now you can build stock trading, which, Vlad and others want to tokenize stocks.
Nice, E10.
Not using ETH, though, right?
They'll use an L2.
Yeah.
They might try to use other chains. There's other chains, and some banks are using these privacy chains, which I'm not going to try to throw shade, but some have had exploits. Some have had famous exploits in other countries. So,
okay.
But I'm not like
get mean, Tom.
I don't want to be suicided.
You think if they are tokenizing assets, you think if they're smart, they either build it on ETH in an existing L2 or they come up with a new protocol, but like that's the right world to build that.
Yeah. So let's say the Wall Street tries to do their own blockchain because they want to control the narrative. Then there's going to be a new JP Morgan that is like Tether that'll be built on the public chains because Tether is built on public chains and it's better than, JP Morgan has 300,000 employees. Tether has 300 and they make almost as much money as JP Morgan.
It's crazy.
Tom, I got to ask you about digital treasuries. This was all the rage. You entered the game, I don't know, 8 months ago. You can correct me if I'm wrong. And this was the way that people got exposure to crypto with leverage. If Bitcoin was up 2%, Strategy was up a lot more than that. Strategy is now in a 70% drawdown. Bitminer is having similar pain given that nobody wants to own the underlying. Let's assume that there is a bottom coming soon for these strategies, for these assets. Why get exposure through a digital treasury company as opposed to just owning the underlying?
So digital asset treasuries, really only 2 have been successful. Empirically, like since October, only 2 have actually been able to buy more crypto. MicroStrategy and Bitmine. Both have bought more than $2 billion.
It's a scale business.
Yes.
It's not a cottage industry. There shouldn't be 50 of these.
Yes.
Okay.
Now, Bitmine is still, because the Ethereum, which is what it holds, generates revenue. Bitmine's got about $1 billion of cash. and its staking rewards from its Ethereum is going to be almost $400 million this year.
Okay.
And they're earning $40 million from their cash holdings.
Okay.
So it's a very profitable company.
Is it trading at a discount to the underlying or not anymore?
No, it's trading a slight premium.
Okay.
But just that, let's say you treat it as net income, it's like the 780th most profitable company in America today.
Have you looked at the correlation between, let's say, the price of ETH and the price of Bitmine and come up with a rhyme or reason for like in other words, if somebody said, what percentage of the decline in strategy or in Bitmine is due to the price movement of the underlying? I'm sure it's a moving target, but it's got to be almost all of it, right?
That's right. And there's two betas. There's decline beta.
Because he's asking if those assets, not the stocks, if the coins stop coining to the downside and start coining up, why would you buy the treasury version?
You're going to make more money buying the treasury because the treasury has a beta to the decline because the price of the underlying is falling. But when the price recovers, then you're unlocking the ability of the treasury to raise more money quickly.
Okay.
And Bitmine has what we call moonshots, made an investment in Beast Industries, one of the largest shareholders in Beast now. Because, Mr. Beast's audience is, he's the biggest single person for Gen Alpha, Gen Z, and a lot of millennials. Those are the next wave of financial consumers.
Right.
So, Beast Financial is going to obviously be a really successful endeavor. And
what is he doing?
Well, they'll disclose. They've disclosed Beast Financial, but
okay.
I don't want to share their plans.
Where's the money coming from for you guys to continue to buy ETH when the market keeps going so much lower?
It's institutional buyers. So Morgan Stanley, ARK Asset, Fidelity, they're large holders of Bitmine.
What percentage of all the ETH do you now hold? I know the goal was it 5%?
Yeah. Okay. Currently, it's 3.52%.
So you're almost there.
If you include the cash that's not been deployed, it's close to 4%. So about 70% of the way there.
Have you guys given public guidance when you think you'll hit that goal? And if and when you do, are you upping that goal? Or would you then say, okay, mission accomplished, we are the war chest of ETH?
We haven't given guidance, but it's probably sometime this year. One thing to keep in mind, if at 5%, it's close to $500 million a year in net income.
Wow.
And if Ethereum recovers to its ratio to Bitcoin, to its historical all-time high, that's around 12,000 ETH. It's close to $2 billion a year in net income.